Welcome traders to Elite Currency. My name is Chris and this video is all about the euro dollar and pound dollar. But first of all, a quick note on our upcoming seminars in February and March. This Saturday we have one in Holland, in fact, and in March 9 we have one in Prague, and we have also later in March Zagreb and Belgrade. So looking forward to see you there if you can make it. This is the link with more info right here, as you can see, so you can check out the exact dates and locations. All right, so euro dollar daily chart price basically has moved to the downside again, retesting this key support zone at 112.50, and we had a very bearish candle despite the bullish engulfing twin candlestick pattern the day before. So it's very dramatic at this moment. It is starting to look more and more bearish, as I was already indicating the last two videos, that the second break in general is already quite bearish. In fact, this was a failure of the upside. Now, it could still be explained by an ABC, so that's why I didn't want to, you got to be careful. You got to keep in mind that that's definitely a possibility as well. 112.50 is an important support zone, and price is trying to push through it actually right now, but it is making a retracement. So it is probably, in my view, still a pullback within a bearish breakout, especially after yesterday's candle. But definitely have to keep an eye on how this how this retraces, how is the pullback materializing. So let's take a look at the hourly chart, and let's take a look at this structure. So we see impulse to the downside. We see perhaps a wave 1, 2, a 3, a 4, a 5. So let's put a fib, if that is indeed so, on this swing high from the top to the bottom, and you can see price stopped at the 50 fib. So that could be a bouncing spot. If price breaks above the 61.8 fib, then in that case, it is not looking, as a wave 4 anymore, and the bearish breakout could be in trouble. All right, and then something else might be going on. In that case, this also, wrong button, sorry. This could also be a clear 5-wave pattern already finished of that bigger wave C, as I just discussed on the daily chart. Let me show you again on the 4-hour chart. This being a B, C, 5 waves within that. So if it breaks above the 61.8 fib, or specifically actually if it breaks above 113.40, well then we might be looking at a bullish breakout, and we might be looking at an ABC completed like this. Excuse me. And we might see a ABC to the upside, or a 5-wave pattern to the upside. In any case, we might expect bullishness. So 113, 113.40, very key resistance levels. If it is a bearish breakout, if price is indeed finally pushing through this massive support zone, then it shouldn't retrace too deeply to the upside. It should make a light pullback and continue. A confirmation of that could be, for instance, if price is able to break through this support trend line like that, for instance, break through 112.50. Again, the second break below 112.50 is making a bearish breakout more likely for the euro dollar. Otherwise, this daily chart is very choppy. It's looking very choppily, and you can see that this has been a correction. Question is if that is also a correction, or is this a wave 1, 2, 3? Right? Is it an ABC or a 1, 2, 3? It all depends on how price will respond towards this support zone. So it's a very interesting spot. The trend indicator, of course, is definitely indicating downtrend at this moment. But the question is, how will price respond to this massive support zone? It's still unclear because price action is really not dominant enough to really decide. I'm leaning towards the bearish breakout because of yesterday's candle, and also the second strong break below the 21 EMA. But let's see how price responds to 113 and 113.40. All right. Now, pound dollar, still continuing lower, in fact. We were looking at the fact that this could be a wave A, for instance. This could be a wave B correction. It's slow and choppy, so that does make sense. And we're looking for a breakout for a wave C. So that breakout has not happened yet. We're looking for price to push above a resistance trend line like that. We're looking for a close above the 21 EMA, preferably the second close. So that bullish breakout has not happened as yet. We can put back the fib that we had on because in this case, we were saying don't trade it right in front of the 50 fib. Remember the last video? Wait for the retracement to the 21 EMA. Look for a break or bounce. If it does bounce, it could go back to the 50, maybe even to the 61.8 fib. So that's what happened. So if you waited indeed patiently and you didn't trade it here to the downside, but you waited for the retracement here, obviously you managed to save quite a lot of pips. The difference, to be precise, between shorting it here or here is about 90, 100 pips. So that's great. Now, price is back at the 50 fib. And that's not a good spot because it could bounce at the 50 fib. But if there's a good breakout candle pushing below the 50 fib and there's a bear flag on the lower time frame, then there could be a good continuation down to the 61.8 fib, which I think is a bouncing spot, a potential bouncing spot, potential support zone for the pound dollar at around 127.25. All right, so now is not a good spot, but if you manage to trade it in here, then that's better. We from ECS Live did trade the euro dollar and pound dollar both to the downside. Pound dollar was a break-even trade, though. This retracement took us out, and euro dollar is still open. So let's see. But in any case, it is looking like a little bit like a falling wedge at this moment because the support trend line is quite shallow. So we would need to break below that support trend line and the 50 fib to signal that continuation to the 61.8 fib. Otherwise, at this moment, this is pretty choppy and pretty close to the 50 fib. It might make a lower low and then fly up like this, close in reverse, make a flag, and then in that case, it's actually looking better for a bullish continuation. So after the break of that flag. So got to be careful in this spot. We had some volatility here. As I said, here we were approaching the 50 fib, so we got correction and we have a continuation at this moment. But I don't think it's a good spot so close to the 50 fib, as I said. At this moment, making a little bit of a bear flag, so I wouldn't be surprised if it makes a lower low. It's just not a lot of space until you hit 128.15, which is perhaps a bouncing spot once again. Otherwise, I don't think I have anything to mention. Once again, just the last thing, if it does push higher, if it hits the 50 fib and closes and reverses, we're looking preferably for the second break above the 21 EMA. So this would be the first, then a little bit of a pullback, and then the second break will be the best. In that case, there's more higher chance of a good breakout occurring. In that case, price is probably starting a wave 1, 2, 3 within that bigger wave C. Okay, once again, more information about our upcoming seminars in Europe. Check out this link. Of course, looking forward to see you there. And above all, wish you great trading. Cheers.